Good morning, everybody. Welcome to the Flow Show. It's Friday, first week of the year, already under the bridge, and a big day ahead, NFP and ISM to come. So lots in store for us today. Hope you're doing well. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. Yeah, we are doing. We are waiting for the arrival, let's say, for the real start of the dollar market, perhaps this year, right?
Yeah. See if things can kick right into gear with this data coming up. All right, lots to talk about this morning, or fair bit to talk about this morning. A lot of data again passing through the screens. We're going to start though with the Bank of Japan, and the Nikkei was out with a piece saying that BOJ easing exit in the first half of the year is still on the table despite the earthquake. So they're at the moment, seems like they're going to look through what's been happening over there. Hopefully nothing more comes from that. They can put it in the rearview mirror, and it's not going to affect their plans for ending of easing. Finance Minister Suzuki said that there's going to be a reserve fund to cover the damages of the earthquake, and it's going to be around 4.7 billion yen, according to Japanese press over there. So that's what they're going to use to help with the damage there. PM Kishida has made another request for businesses to raise wages and for those wages to outpace inflation. One of the Japanese unions, one of those leaders there, said it will take time to get a sense of the wage outlook. So as we already know, the big feature for the BOJ this year and for the PM is wages, and whether we're going to see some strong wage demands coming into the spring, which we'll probably start hearing about maybe from around February. We'll start getting some little tidbits dropped on us as to what those wage numbers are going to be like. Over in the UK, PM Sunak has said there will be no spring election, so nothing in the first half of the year, and said that second half of the year is the most likely period for when an election will be called. So that's it's his ball to play with, but he's ruled out an early election at the very least. Coming into some of the data, and we had a few bits and pieces out overnight. Japan had some more services data out there, PMI. Not as high as expected, but still up on last month, 51.5. Look at some of the other bits and bobs as well. We've had a few bits out this morning. Germany, retail sales looking very stinky for November, which traditionally should be the start of a strong period of retail sales. But as you can see there, some big fat red numbers there. So no improvements in that side of things for Germany on that sector anyway. All looking pretty ropey at the moment. We did also have some construction PMIs out, which I've only given half a glance. Italy doing quite well on that, 55.2. Germany still in the 30s, 37, a small improvement. France still contracting. The pan-Eurozone number still contracting. And UK number still contracting, though a bit of an improvement on that one. Also, inflation data this morning. Main numbers being the Eurozone numbers, which didn't, well, depending on what your expectations were you were looking at. Some had these a pip lower. I think Bloomberg had this at 2.9 and 3.4, so they were spot on. Either way, it's confirmed that the headline CPI has risen again versus the previous number. The core number has come down as well, so it's gone the other way. Core can lag the headline number quite a bit, so it's a little bit of a cancel effect. As we know, the ECB were expecting inflation to pick up a bit. That it's done, but core has continued to come lower. So that's probably the most important number for them at the moment. If they get that number down towards their target, they'll be more happier about that. But at the moment, we're just going to see over the next couple of months what inflation's going to do. Is the headline going to go up still for a few more months, and is the core going to keep coming down? And then will the core turn around as it catches up with these moves here? So lots of dicing to do about that one, but the fact of the matter is inflation is still well above target, which will keep will keep a few people in the market from getting too dovish about rate cut expectations for the ECB. PPI, as you can see there, coming in a bit softer than expected as well. So that's keeping some of the disinflationary pressure in the pipe. Again, the numbers that lag behind a bit in terms of CPI. Right, well, it's jobs day as mentioned, and we've got a few bits and pieces out yesterday. Obviously, the ADP numbers, but we've got Challenger Gray layoffs coming out as well. If I can find it, where are we? 12:30. There you go. 34, just under 35,000 cuts, which was the second lowest this year amount of cuts announced. So strong in terms of jobs activity that not a lot of people are looking to be laid off. Although it was noted in the report that hiring is plummeting. So there's less hiring going on, but we're not seeing the full translation or switch into wholesale job losses, which is usually the next phase. Hiring stops, then you start getting the job losses. So we're not yet moving into the job loss scenario yet. Maybe we will get some of that later today if it's a stinky number from the NFP. ADP came in, a bit of a surprise to the upside, 164k versus 115k expected. So everything looks tickety-boo as far as that one's concerned. Market, it likes to take its cues from the ADP sometimes for the NFP, unless the NFP comes in something completely different and everyone goes, oh, the ADP is rubbish. But anyway, the market gets a sniff from that. Jobless claims as well coming in, nothing much to write home about there, still trucking around the 200k mark. Continued claims as well, nothing really of note there, still staying in the 1.8 millions, just waffling around in that number there. So not really building on the trend that we've seen over the last few weeks. It's just seemed to be plateauing a bit on that. And then we've got the S&P Global Services PMI final for the US coming in a tick better at 51.4 versus 51.3 flash and up from 50.8. So services doing okay there. We also, as mentioned today, get the ISM number later on for services. So that's going to be a secondary one to watch after we get the NFP. Don't forget we've got the CAD data as well. But then we get, we've actually got all durable goods and bits and bobs coming out at the same time as well. But the ISM services could be a bit of a kicker for whatever happens in the NFP. Could swing it back the other way. So potentially lots of volatility in the data for later. Right, just kind of bits and bobs. We've got a new Fed member dropping in to the St. Louis Fed, replacing Bullard. Alberto Musalem is going to be the next president. He comes in 2nd of April, so a few months yet for us to, or for someone else to go and pick out whether he's hawkish or dovish. But he's going to be coming in April, not on April the 1st. He's made it April the 2nd. He doesn't want to be a fool walking into that job. If you're not doing much on the trading front today, you can grab the popcorn and watch someone else trading because according to Bloomberg, there's been a big bet put on treasuries that they'll get hit after the NFP report via options. Someone's betting that yields will be rising to around 4.15%, 4.15% from their current 4.02, I think we're at the moment. Let's have a quick look. 4.03, nearly 4.04. So yeah, this expires today. Apparently, it's a big bet. Some 650,000 paid in premium for these options that yields will rise. So looking for a good number for the NFP. And yeah, apparently, if yields get to 420, the profit is around 10 million according to Bloomberg's calculations. We don't know the full ins and outs, and there's probably lots of summarization from Bloomberg on that one. But if it does jump up that high, 415, 420, that's apparently one of the biggest moves in yield since March. So it really needs to go gangbusters going to have to be a super duper number to get yields up that far, I think. But we shall see. What do you make of that bet, Kay? Wasn't you, was it?
No, it wasn't me. But I do. But I did a cheeky. I made it a cheeky bet or put in a cheeky number on the NFPs, like contrary to what I would love to see. So I went for a low number, hoping that it's going to be a high one. No, I didn't make that bet. But it's when you do such short-term bets, it's really casino cheap. Of course, the person making the bet may be completely right, and we're trading at 420 this afternoon. But yeah, it's more like a casino play, or somebody who has come to the same conclusion as we did end of last year, is that the cuts are being a bit overpriced, and there's not too much. Sorry, there's not too much reason for pricing in so many cuts. So in that way, it could be a decent bet for the afternoon. Isn't that January number on the NFP? Isn't that one that tends to come out far away from expectations, or is it the February one?
Which one, mate?
This NFP number isn't it traditional that in January we can have like a big variation of what compared to expectations? I seem to remember that last year and the year before we had those bumper numbers coming out in January. Okay, I mean since then the job market stabilized probably, but because we were still like in the aftermath of the pandemic. But I had the impression that there were like bumper numbers. It's the February number, right?
Yes, they can get a bit
Okay.
funky out again. Yeah, I mean that's the.
Yeah, but anyway, I mean, we were talking about this labor market already length over the past months, and it's still the big domino that stands. And if we confirm it again today, I guess there's going to be more repricing to be done on those rate cut expectations. It does look like the dollar basically took back a fair bit of what the end of the year saw as a move. So I think somewhere we are relatively neutral territory right now. And as I was saying yesterday as well on F.A.C.E, I do think that probably today, as we get that combination of the NFP and the ISM, it may really kick off the dollar market in a bigger way than what we've seen so far this week. Although we had moves in the yen, of course, for different reasons. But a lot of what's been happening at the start of this year is, I reckon, a give back of the end of the year flows, right?
Yeah, exactly, mate.
And today is the start of the real market, I hope.
Yeah, I mean, it's a bit weird than waiting for Friday. I think it may still be a bit of a funny day, and Monday things will really kick on. I was lamenting yesterday about the fact that yields were doing nothing. We've had a bit of a break up in tens this morning, but it still looks all pretty slow and steady stuff. So it doesn't feel like we've got a full trading market just yet. Whether that picks up today or from next week, who knows? But we've watched yields for long enough these last couple of years, and it's looking like this is one of the quietest periods they've had for quite some time. But it could just be beginning of the year. And what you mentioned on rate cuts as well, we're seeing a bit of a further washout of what I'd call the extremism side of rate cuts. We've had the ECB, we've had the Fed, people not expecting as much as 150 pips now. Now we've got this morning certain markets reflecting that we're showing less than 150 pips of cuts for the ECB, and now the Bank of England just earlier expecting less than 125 basis points of cut. So we've got a bit of tightening of the extremism that we've seen into the latter part of the year, which is to be expected, really. You always get the market running too far and then scurrying back a bit the other way. But then that could all change with the data. Really stinky NFP later and the rest of the data, and we'll be pricing back up those cuts again. But if it's good numbers, then we're going to go the other way and trim some of those expectations further. Right, just looking at, or let me go finish off with the headlines. If you want a good indicator to go long dollars, Morgan Stanley has just dropped their bet for a dollar rally in 2024. I think they were short euro dollar or something. They've now turned neutral from bullish on the dollar. They've pivoted to shorting the euro versus the yen. So sometimes these banks can be a good contrarian indicator, but they've given up on their dollar bullishness this year, and the dollar's done nothing but rally since that headline dropped, as you can imagine. But there we go. Right, so let's look at the data. So it's a funny one because there's so many different parts. Yes, the headline number is important, obviously, if it's a big variation. So if you get something, over 200, something less than 100, then the market's going to get a little bit antsy. If it's in or around expectations, even if it's still just positive numbers, the market may not get too jumpy on that. What you want to be watching is for the average hourly earnings and the unemployment rate, and also the participation rate. They're the ones that the Fed's mainly going to be watching. We saw the unemployment rate ticking up and then it came back down again. Wages are still hanging around this 4% marker. They've been there for quite some time. So we need to see, it's expected to come down a pip to 3.9, but if it remains at 4% or even goes higher, that's going to keep some inflationary pressure in the pipe because it will show that wages are staying up. Obviously, if we get a much softer wage numbers, then the market's going to start playing some dovish strings on its guitar once again. So headline numbers, as I said, important. Unemployment rate, match that off as always with the participation rate, because this number can move just because this number's moved, the participation rate. So if that comes in higher, that can lead to the unemployment rate going higher. So a really good number is unemployment going down and the participation rate going up. That means more people are coming in, but they're finding lots of jobs. A double negative would be that going up and that going up, which would indicate that there's more people coming in and more people are struggling to find work. So that's how we go with that number. Wages speak for themselves. If it's softer, that's going to be a bit bearish. If it's stronger, that's going to be a bit bullish. Also got the CAD jobs as well, Canadian jobs coming in. So for all you loony traders, you need to keep an eye on that. Same basis as well. Jobs market was pretty strong last time around. We had decent numbers in the full-time employment. Got to remember as well that this is all December numbers, so there is a bit of seasonality in here. You can, as Kay mentioned, get some volatile numbers because you get seasonal hiring in here. People taking on for the holidays, then people leave in January. So it can be a bit of a funky one. No weather issues, I don't think, this year, Kay. That's something that's we've seen in the past with these numbers when there's been big snowstorms or winter weather's not getting people allowed to report and sign up and whatnot. So what are your thoughts for CAD jobs and for the NFP?
Yeah, yeah. Again, you're right in saying, especially for the CAD numbers, I think we need to be a bit careful because there may be some seasonality in there. So we could come out quite far away from the expectations, especially if I recall well, the start of the year, the balance between the full and the part-time employments, that could be looking a bit strange around the turn of the year. So that one could put a bit of a move, an abrupt move in the Canadian market. The thing is as well is that listening to Canadians, but they're usually a little bit downbeat on their own economy anyway. But they expect 2024 to be a bit of a difficult year for Canada. So Get a weaker report, those Canada bears could enter the market for good. So that's one that I'm going to keep an eye on. If we get a beat, we're probably going to see some crosses move. Probably the Canada moving a bit stronger against stuff like, I don't know, the euro or the yen or things like that. But if we get a weaker report, I'm expecting those Canada bears to come out of the woodwork and starting to hammer Canadian dollar a bit. Now then, on the NFP, I don't know. I really don't know. It's so far. I've got the impression that, and as we've been talking already about it so often, that big labor market domino is still standing, and the longer it stands, the more this market risks having to reprice expectations, because you can have like, and I mean, we are really in a Goldilocks or very soft landing scenario right now. So we could have like a little bit of the same reaction that stock markets are actually going up on the back of it, and the dollar perhaps not gaining as much as people would think. That's about what we saw in November, December as well. But I'm going to say personally that if it comes out good, I think today the dollar will gain some strength, and then that makes me think about this combination between the US and the Canadian report. If that Canadian report comes out a bit funky in combination with a better than expected US labor report, I could see this dollar Canada take off. That's one that I'm going to monitor. I'm not saying it's going to happen. It's not even my base case. I'm really open-minded to whatever is going to happen. But the Canadian dollar may be the one that is going to move the most this afternoon, just because of those kind of expectation that I read about. People saying that they expect the Canadian economy to be a bit under the cush this year. So that is about it. Yeah, that's about it, mate. And yeah, if the US report comes out stronger, I think, yeah, the market will need to reprice more, and then you're probably going to see more demand coming into the dollar yen. On the other hand, if we see a weaker one, we've got to look at probably the commodity currencies, because they are getting a bit closer to interesting levels. I showed this Aussie dollar this morning. We are about 70 pips away from a very good support area there in the low 66s. I have a trend line coming in there, a few moving averages on the dailies as well. That could be an interesting zone there on the Aussie, for instance. If we get a good report and we get a test of that 66 figure 20 zone, that probably is a very decent area to keep a close eye on.
Yeah, thanks, mate. I need to do a bit of updating on my charts. I think I haven't had much of a chance this week. I could probably I need to put a couple of fibs in there, because we've probably got a fib. I won't do it now because I'll faff it up. But we're probably pretty close to the 38.2 around here somewhere, if I'm not mistaken.
Yeah, and especially of that last move, you know.
Don't be lazy.
Yeah, and especially of that last move, yeah, that one that we saw from starting November up to the year end. We are getting closer to levels. You see that the 50%. Well, we are the 66.40 is your 38.2, and then just below 66, around 70. There's a bit of activity, 70, 75. It's going to be a very interesting zone on that Aussie if ever we get down there.
Yeah, and yeah, especially just under that 50 fib as well, that old 65.20 area. That's seen a lot of action.
Right from where we are right now, that's a 3% move, 2.5% move. That's a big move already.
Yeah, I'm not expecting it today, but yeah, we plot the levels, we keep an eye on them, and that's how we plan for these things. Yeah, just for anyone who hasn't taken part yet, I've put the link up to our NFP competition in the Zoom chat there. So take a look at that. Get your guesses in quick if you haven't already. Win a prize, win a free month on the ForexAnalytix platform. Right, well, cracking on to looking around the prices. Not an awful lot going on. Dollar yen is continuing to get up, get its thing on. We're well above 145 now. I'm going to be having a long, hard think about this one, whether I cut out my shorts that I'm currently holding and just see what it wants to do for a while. A lot of water to go under the bridge. We've still got a bit of washing out of those BOJ expectations, more for January now. Not a lot of people expecting anything to happen in January, as I was discussing with K-Man and the crew yesterday. Probably the only real expectation for any sort of change would be YCC at the January meeting. If they did something like that, which they could do, it could be a step that they indicate that they are going to be ending easing by either cancelling YCC altogether or widening the band to something really wide that won't really make much odds about things. So there are going to be expectations coming in for each of the next few BOJ meetings. But it seems like a few of those are washing out for the January meeting. Anyway, it's been a strong old move. There's no denying that. Give or take 500 pips off the lows, which puts us back where we were coming into the latter part of the year. So can it keep going? Yeah, it can do. The fact it's got above 145 is a bit of a worry, as we've been saying. Get above there and things might look to change. The complexion starts to change a bit. The 50 fib is going to be my key level here into 146, and that fib there, because if we get up to there and hold it, then it keeps the trend in play. If it goes through that pretty easily, which it may well do on a strong number for the NFP, I'm going to look at it from a closing basis today. If we close above there, then I'm thinking that we've got more in the tank, perhaps. If we don't close above there, then, as I say, it will keep this trend in play. You remember when we had that move in euro dollar, when we got up to these highs, and then it started breaking down again, and people thinking, oh, it's going all the way down. Well, it got down to around about the 50 fib of this move, as I had it on the chart previously. Got down to the 50 fib, a few people panicking it's going to keep going, and then we got a bounce, and then we headed up to 111. So things always look the most bearish at the bottom and bullish at the top, or whichever way around you want to use that one. So I'm not overly panicking yet. I would have liked it to stay below 145, obviously, but it hasn't. So I'm going to see what it does around this area if it gets up there, and decide what I want to do my shorts based on that. Can this go much higher, Kay? I mean, obviously it can go higher, but there's not going to be that much washing out of expectation for the Bank of Japan, is there?
I'm a little bit in the same mood as for the rest of the dollar pairs, adding, of course, that very bad event which sparked a fair part of this move. But I'd say, of course, it can go higher, but then we will need strong dollar numbers, and without that, let's say that everything goes into neutral. I think the biggest part of the move may be done, and then we are going to have to look at what the rest of the currencies are doing. But has it got the power on its own? I think if you look at the yen pairs across the board, they have taken back a lot, right, of what we had, and then it's like, really, yeah, can it go? Yes, of course it can go, but then I think it's going to take strong numbers on the other currencies. It's just that I don't want to counter trade it, because it just costs too much money in funding. You really need to be right quickly if you're long yen still, and that's if you don't get anything out of the Bank of Japan meeting coming up 23rd or so, you're looking at another month and a half or so before the next Fed meeting where the market will start to speculate again. This is going to be the start of 2024, and we're going to see those things like expectations getting built up and built back off. But it's going to be very uncertain unless data show us really where it has to go. Like assuming, for instance, that the labor market starts to turn in the US together with inflation coming down, then your dollar is going to suffer, right? If in turn that labor market holds up really with inflation still hanging around of coming down very slowly, you're going to have to look at the other side, because the bond market will have to reprice once more. So, and that's going to be the start of the year for me. Really, and I've said it on the Flow Show yesterday as well. I think the big decision or the big period where trends may really develop is going to be Q2 of this year, because then we enter really expectations territory for the Bank of Japan to normalize versus the rest of the world to start cutting rates, and that is perhaps where your big move in the yen may then start to happen.
Yeah, because you have to remember there's still a bit of a big disparity between what the market thinks central banks are going to do and what central banks have touted they're going to do. The Fed, they only touting 3 cuts this year. The market's touting 150 basis points of cuts. Far more than that. So that's 6-7 cuts we're looking at as far as the market's concerned. So that's an extreme number. The real market is probably round about where the Fed is, and that we show the gauges for that. You can look at something like 2-year yields. We're trading 4.42, so we saw some 80 pips under where Fed funds rate is now. So that gives you an idea what some of the real pricing is showing for Fed rates. So you've always got the extreme side, you've got what the central bank says, and you've got the more sensible parts of the market who are trading it. So, but even there, it's just a bit over what the Fed expect themselves. So that's what we're going to be trading with all these data points. Really bad NFP today. All the extremists will be piling into those 150 pip plus cuts. But then you'll probably see something like 2-year yields coming back down towards 420s, maybe a bit softer, pricing a bit more cuts than they are already. So that's how you get your gauge anyway. And we're going to be playing this ping pong match until we get the first cut, or until we don't get the first cut and something changes, where the Fed or whoever turns around and says, actually, you know what, the economy is doing well enough that we don't need to cut right now, or we're going to hold off cuts. So it's going to be fun and games when we get through this second quarter of 2024. Mark wants to look at gold. Keeping half an eye on gold. As I spoke about this on Monday, it's not doing an awful lot at the moment. We've had obviously this moves up. That's my watch area, 2075. We can't get and hold above there for any significant length of time. So if you're looking at shorts and want to play it on the wider, that's your area there, 10, 15 bucks above, and you're wrong. But that's that number at the top. We're not really getting a move down to near 2010, 2000, which is my main support area. So while we're messing around in here, I've got no real interest trading it in the middle here. Either trade it down at 2010, 2000, or trade it up here at the highs, into those highs as well, and just take your cues from that one. What are you thinking, Mark? Let's know your view as well, please. Are you bullish, bearish? Are you trading it in the middle here? Are you scalping it around? Let's know your thoughts here. Okay, you got any thoughts on gold at the moment?
Yeah, I was going to show the picture that I'm looking at. Again, yeah, and I think 2024 is going to be an interesting one for the metals as well, especially if we start to see rate cuts within a reasonable scenario for the rest of the economy. I think metals could actually be doing be doing pretty well. I can have a look at it if you want.
Yeah, no worries, mate. Ali, what's ORE support? Have I just got a fuzzy head and I don't know what that means? ORE support. You're long. Where are we? There we
85.
go.
Are you sure
Yeah,
your big figure is 85, Ali, or 86?
yeah, that's the other question.
Hmm.
Anyway, yeah, I've got no change in my view of what's going on in Euro sterling. We're mooching around the middle here, just playing a big figure ping pong at the moment. We're finding a bit of support into this 86. It's not a huge level. We've seen prior action going on there. I think again this is a bit of speed between cable and eurozone. There's a little bit of positivity around the UK still, as we know. So that might keep the a bit of bearishness in this one, but unless we break out of this range, I'm not interested. I'll just stick to trading around that range until something changes for that one. Kate, do you want to take a wander around?
Yeah, no problem, mate. Yeah, Ali, while I'm taking the screen, it's the level that I showed yesterday, right, on the euro sterling. I do have a little bit of activity there as well around that 86, which is, as Ryan says, a bit the middle of the road, but it does seem like the first attempts that we've had to come down there are holding, which is probably Head and Shoulders, possible in 1970. Oh, this one here? Is this the one that you're talking about?
Or are you looking a bit wider to the?
Oh yeah, he says yes.
Yeah.
So this one. What is this? Bang here, 2053, 2090. That's only $40, you know. That's 2015, if that's the one. Oh, you're looking at the horizontal? Well, still that's only $40. So still only 2010. Yeah, I think we're ranging here. You see this zone of activity that we had? It does look like we're back in there. 2050, 2030. That's what we're looking at going into the afternoon. If we start to get below this little support here, which comes in around 20 and a quarter, so just below that zone, we could have a look at this level here again in the low 2000s. Indeed, if you look at and I think I've missed that little spike here. You look at it from a technical point of view, the 2017 here is going to be your 61.8 if it goes below there. That should mean that we are seeing very, very strong numbers out of the US, which are dragging everything lower. As we've seen already, the stock market is also
Just before you change it,
yeah,
could there be a head and shoulder developing, taken from that just after the 11th?
after the 11th
Yeah, so
here.
that no, other side there.
Where?
Could that be a
Yeah,
shoulder
this
there,
one.
and then a head, and then something developing the other side? You like your head and shoulders more than I do.
Um, well, the only one I see here is this one.
Okay,
Um,
I'm just seeing a left shoulder. Go on, you take it. You get off it. I don't
yeah,
like head and shoulders.
I don't know which one you see. Oh, here.
Yeah,
Oh, here. One.
yeah.
This one. Okay. Could be, and this is like a complicated head. I don't
Yeah.
know. That is something to ask. Probably some other guys. Okay, all right. So here, then the whole of this, and then here. Okay. Yes. Then indeed, if you
Look at me.
start,
I'm an expert.
huh?
Look at me. I'm a head and shoulders expert.
Yeah, now we are experts. So yeah, if you start to break then below 2030, oh yeah, you get the confirmation on the 20 and a quarter. Yeah, then it could be party time down a fair bit. That's going to be, yeah, that's going to be indeed, yeah. Taking you back down here somewhere.
That's the
All
main
right.
thing. Let you trade that, Mark.
Yeah, you take Ali stuff because or support. I don't know what that means. But anyway, let's keep an eye. Let's look at what's happening on the S&P because we are below this little support here from where we took off at the end of December. We are now below 46.95, 47. We're trading below. So it does look like this repricing that yields really are affecting the stock markets. The thing is also we will really have to look what's happening here once we get the NFP report, the labor report this afternoon. There is some really decent support around 46.37, and then you add the prior high here also around 46.10. This 46.10 40 zone to me is really key on the S&P. Start to lose it, then we are going to go much deeper. Is there a good reason to lose it? I don't really think right now, seeing the liquidity and the relative quiet in the market, I don't see too much of a reason for it to break. But if it breaks, that's going to be a big break, okay? And then we are talking about 44s, in my opinion. If we get a very mild miss with, let's say, unemployment rate staying at 4, and then we get like 100K or so, I think the equity markets could take comfort from it, and we are going to have a look back at this 47.5 somewhere. That is what I'm looking at for the S&P this afternoon. And then, as I already showed yesterday, this is a bit, I need to clean this one up. Okay, oh yeah. Okay, anyway, I mean, this is one that I was looking at, is cable, yeah? I'm gonna clean it up, don't worry. But here, no. Look at this 126 turnaround, okay? Low, 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 highs, highs, low, low, low. This is your magic number for this afternoon, at least mine on the cable. 126.10, stretch it to 126, the figure if you want, okay? And then watch out for false breaks and then back up. This is going to be an important level, I reckon, to close the week since we're Friday, okay? We saw also on the top side that we respect some bit of a downtrending trend line here, which comes in at around 127.10. And then I've got this 127 and a quarter, 127.30 as well in there. So these are going to be my two levels. And I'm going to pay close attention to the sterling because, as Ryan and we already talked about, it does look like there's a bit of positivity going around in the sterling. Yes, euro sterling is finding demand in that 85.90, 86.10 zone for now, but get like a positive risk number, which would put pressure on the dollar. Cable is one that I'm going to keep on my radar because it's traditionally a bigger move than the euro dollar. So if we get a move here and it holds again, I think this cable could potentially start to move higher again. So this is one that I'm going to keep closely on my radar. I'm open to what direction is going to trade right now, but I would say in case of a positive, that is negative dollar number, this one has a potential, I think, to take off a little bit. On the yen, we really okay. We are here on it stopped around the 200 of the on the 4 hours, but really we are through this zone here, 144.60 to 145, 145.05. It's still beat and they're still repricing expectations on the Bank of Japan, this uncertainty with that quake. But So if we get a good dollar number, I reckon we are going to see mid 146s, potentially even 147s before this is over. But if we get a weak number, all those who have cut back their positions right now, they may be tempted to take it, at least retest that 144.5, 144.60 zone on the dollar yen. And then there's another one that I'm keeping an eye on here. It's Aussie dollar. See, since we had like 1, 2, 3 touches, another one, and then we broke through it into the end of the year, 66.5, it was then. Now it comes in around 66 figure 10, this one. And then you have another one here, Trump level around 65.70, and you have your 200 DMA and your 55 DMA here as well. So this whole zone, 65.70, 66 the figure. If we get really good numbers on the NFP, pay attention to what's happening in this zone. And then of course we've got that 65.25. I'm not showing on this one, but I have it on my shorter term one, this 65.25. But I'd say perhaps this zone has shifted a little bit upwards now, and I'm already going to pay very close attention to what happens in the 66 figure 10 zone with the Aussie. We could see on a good number the move here, and then having to reassess what's really going on the dollar. That's going to, the 10s are going to show us what we really need to do. Yeah, the 415 is here. That's the 50% of this move. That was the move higher, right? But then 410, 415 is where really it's going to make a decision on the 10s this afternoon. Okay, for those who will use the yields as their guide. All right. And those are the main ones that I'm going to look at, really. I'm not really interested in euro dollar, really, until we see 108.60 or a return up to 109.75.80. That's about 100, 110 points. I think we're relatively neutral in this zone on the euro dollar. And as I was saying as well in the room, perhaps on it's going to be more interesting if we have positive or negative risk numbers to trade some of the euro crosses. I'm thinking perhaps about that stuff like the Canada. If we get a weak report, there may be some surprise here on the euro Canada. We are seeing this euro Canada mooching around in this zone, and as Gav was already telling the room this morning, we are capping around this 146.40 area. But if we really get a bad Canadian report, this one could pull a bit higher. In turn, if we get a good one and we're starting to go under 145.5, then we open the way for a lower trade. So I'm going to watch because dollar CAD could go really fast, and I'm going to watch this euro CAD perhaps as a how shall I say, a secondary monitoring on the Canadian data. And with that, I'm going to give it back to you, Ryan, for today.
Thank you very much, mate. So really, just final thoughts for the NFP and everything today. Just know what the market's doing going in. We're going in with a little bit of dollar bullishness at the moment, particularly in dollar yen. Yields are ticking up. So if the data comes in strong, we're going to add to that and undo some more of those rate cut expectations. On the flip side, if we get a poor number, that's going to be probably the bigger price shock, and we'll see a reverse in the dollar and those yields. So always know what the market's doing going in, and then define your trading from that. I'll be doing my usual, just looking at picking the levels where if a price move goes, it might get a bit stretched. Be that to the upside or downside. I won't be that interested in trying to jump into something in the middle of the number. That's how I tend to play these things. So anyway, thank you very much for following us this week again on the Flow Show, first week in the new year. I hope it's been a good one so far for you. We'll see what happens over that data, and we'll catch you all bright and breezy on Monday. Have a great weekend, everybody, and thank you very much, Kay.
Ta-da.